Hello everyone. So now we are going to discuss about remaining three terms, that is income, liability and capital. And all these things we are going to discuss from business point of view. Business income, business liability and business capital. So out of these three terms, first we are going to understand about income and liability. So let us understand with an example. Let us say suppose I've taken some tuition classes for you, some accounting classes for you. And at the end of the classes, after the end of the syllabus or course, I've collected a tuition fees of 10,000 rupees from you. So I've received a money of rupees 10,000 from you. And let us say I went to the bank and I took a loan of 5 lakh rupees from the bank, which I need to repay in future. 5 lakh rupees of loan I taken from the bank. So here also what is happening? 5 lakh rupees is coming into the business, and even this 10,000 rupees fees which I collected from you, tuition fees, that is also coming into business. Now out of these two amount which I have received in the business, 10,000 is not money received from you, it is money earned from you. What are the 10,000 rupees I have collected from you? It is not just received from you, I have earned from you. And what are the 10,000 which I have earned from you? There is no obligation, there is no liability, there is no condition to do repayment in future. So income is money earned, not received. Money earned, and there is no obligation to do repayment in future. There is no obligation that I need to pay back that money in future. So the 10,000 rupees is going to be called as an income. Next, liability. What are the 5 lakh rupees of loan I have taken from the bank? That is not earned by me. I have not made any efforts to earn that 5 lakh rupees. That is just received from the home bank, which I need to repay in future. So liability means money received, not money earned. It is just money received. And what other 5 lakh rupees I have received from the bank? There is an obligation to do the payment in future. So let it be in case of income or let it be in case of liability. One thing is common. What is that? Inflow of money. But whenever there is an inflow of money, income is money earned. I've earned the money, that is the reason I'm receiving. And there is no obligation to do repayment in future. But liability is what? Money received. And there is an obligation to do repayment in future. So this is how you are going to differentiate what is an income and what is a liability. So what you need to think, whenever you receive something, you check it out. Have you earned it or have you received it? And one more thing, you check it out. Is it you are liable to do repayment in future? If it is yes, then it's a liability. Otherwise, it's an income. So I hope you have understood what do you mean by income and what do you mean by liability. Now listen. Liability doesn't mean that only money received. For example, let us say you went to the supplier of the goods. You have received goods from him. You have received the goods from the supplier of the goods. And you promise that you are going to make the payment of this money in future. Whatever the goods you have purchased on credit. It means you are not paid the money. You are going to pay in future. So even goods received for which you have to do the payment in future is a liability. Let us say you wanted to buy one asset, furniture. You went to the furniture shopkeeper. You purchased that furniture on credit. saying that you are going to pay this money in future, even this is also a liability. So liability means you may receive money, you may receive goods, and you may receive asset, and you promise to pay that money in future. All those things are called as liability. So money or goods or asset received and there is an obligation to do payment in future, then it's going to be called as a liability. So now we'll understand what do you mean by capital. Capital is very much similar to the liability. Same meaning. Meaning of liability and capital is similar. Only one difference is there. Liability means you're receiving the goods or money or asset from an outsider. Business is receiving the goods or asset or money from an outsider, and for which business is liable to make the payment in future to an outsider, then it's going to be called as liability. Suppose if same goods or money or asset, if you have received from the owner, suppose you are receiving the goods, you are receiving the asset, or you are receiving the money from the owner, even then also business is liable to make the payment of that money in future. Even then also business is liable to repay those things in future to the owner, because we follow which concept? Business entity concept. Business entity concept says that business is separate, owner is separate. When you have already treated business is completely different from owner, then whatever the money the owner has invested into business, whatever the money, whatever the asset, or whatever the goods the owner has invested into the business, for that business is liable to do repayment in future to the owner. So that particular portion is called as a capital. So what do you mean capital? Capital means money or asset or goods invested into the business by the owner. It is called as capital. And it is similar to the which one? Liability. Because liability is also repayable in future. Capital is also repayable in future. Now doubt will arise, sir, if owner has invested anything into his own business, sir, it is his own business, why he has to get back that money from his own business, or why his own business is liable to pay that money to the owner? Because we have assumed that business is separate and owner is separate. We have taken these two people as separate. So if owner gives something to the business, business has to repay it. Or if business give anything to the owner, owner has to repay it in future, because of business entity concept. So conclusion is what? Liability and capital. Liability and capital. Both are obligation to the business. Both are liable to be repaid in future. Both are obligation to the business. If it is to outside us, then it is called as liability. If it is towards the owner, then we call it as capital. So by this we have understood all the 5 terms. What all 5 terms? Income, liability and capital. Now in this you understand one last term, last concept called as accrual concept, which I explained at the time of asset and expense. Same thing is applicable here. Accrual concept. Now see what accrual concept says. For example, let us say 10,000 rupees per month is the tuition fees or college fees. Let us say I have taken classes for you people for 12 months. In the current year I have taken the classes for 12 months. So it means that I have to get 1,20,000 rupees from you. So in this current year, 12 months, how much is the tuition fees or how much I have earned from you is 1,20,000. Entire 1,20,000 which I have earned in current year, it's an income of current year. Even if I receive just 1 lakh from you and 20,000 I'm going to receive in the next year, even then full 1,20,000 is called as income of current year. So once you earn the money, it's an income of that year, even if that amount is received or not received. So whatever 1 lakh I have received in current year, that is earned in current year, and whatever the 20,000 I received in next year, that also I have earned in which year? Only current year. So both this 1 lakh plus 20,000 are earned in current year. So total income of current year is 1,20,000. Even if you receive 1 lakh. Or take one more example. Let us say that you have received 1 lakh 50. Instead of 1 lakh 20, you have received 1 lakh 50. 30,000 rupees I collected fees in advance. Tuition fees I have taken in advance from the student. But have I earned 30 in the current year? No. I might have received, but I have not earned 30,000 in current year. So 30,000 rupees is not an income of current year. Only 1,20,000 is called as an income of current year. So how much you receive in current year is not important. How much you earn in current year, that is important. So that is your income of current year. As per which concept? Accrual concept. So what you need to understand, once you have earned 120 in current year, how much ever you have received or not received doesn't matter. Full 120 is an income of current year. And same thing is applicable for expense. If 12 months expense are 120, salary 10,000 per month, he work for 12 months, 120. How much is paid? Even 1 lakh paid, expense is 120. Even 1,50,000 paid, expense is 1,20,000. Full 12 months expense. Don't take anything more than 12 months, less than 12 months. Take exactly 12 months expense, even it is paid or not paid. So at the end of the current year, whenever you find profit or loss of the business, you need to do income minus expenses. But whenever you take how much is your income, you take as per accrual concept. How much is earned in current year, received or not received doesn't matter. Minus you do expenses as per accrual concept. How much is expense of current year, how much cost is expired in current year, how much benefit is consumed in current year, even it is paid or not paid, that is an expense. So profit or loss is always calculated by taking accrued income minus accrued expenses. So this accrual concept is most important when you talk about income and expenses. Yes. So by this you have understood all the five terms. First one is asset. So asset means what? Unexpired benefit or unexpired cost. Unexpired benefit, or we can say unexpired cost. That portion of the expenditure which has not been consumed till the end of accounting period is called as an asset. In other words, it is unconsumed portion of the expenditure at the end of the current accounting period. Huh. What is unconsumed in current year, not expired in current year, will get consumed in future year. So now though we call it as an asset, but in future it will be called as an expense. So usually the unexpired cost becomes future expired cost. What is unexpired in current year, in future it will become expired. So example of asset is land, building, machinery, furniture, car, AC, etc. Next, you have understood what do you mean by expense. Expense means expired cost or expired benefit. That portion of the expenditure, that portion of the money spent or expenditure which has been consumed during the current accounting period. Again, now listen, just one more point. See, you people might have heard about expenses and losses. Both are similar, both are same, but there is a difference. Expense means utilized cost. Loss means lost cost. Here it is lost, here it is utilized. See, for example, let us say you bought a piece of cake, you purchased a piece of cake and you consumed it, you have eaten it. So, whatever the money you have paid for that particular piece of cake and which you have consumed, it is an expense because it's expired. Once you consume, once you eat it, it is expired. Take one more example. Let's say you purchased a piece of cake and you paid money for that. But that cake has fallen down. Let us say it is spoiled. Now you cannot consume it. Now what will happen? Even if that piece of cake has fallen down, it is being spoiled, you cannot consume it now because it is spoiled now. But still the benefit is expired. So you eat the cake or the cake is being spoiled. In both the cases, benefit is expired. But in first case, when you consume the cake, when you eat the cake, you have received the benefit of that. But in second case, you have not received the benefit. So expense are of two types: utilized and lost. Let it be utilized or let it be lost. One thing is common. Here also it is expired. Here also it is expired. But here you have enjoyed the benefit. Here you have not enjoyed the benefit. So utilized cost means it is that portion of the expired cost which benefits the business. Example: salary, rent, electric charges, depreciation. You're using the electricity, you're using the premises, you're using the services of the employee, you're receiving the benefit and you're paying the money. That's an expense. Lost cost. That portion of the expired cost. It is also expired only, but does not contribute to the benefit of the business. We not received any benefit, no contribution to the benefit of the business, but still the cost is being expired. For example, let us say you purchase one piece of cake or let's say you purchase one car, and once you purchased it, it is destroyed due to fire. Let's say you purchase today, next day by end of the day or night or next day morning it is destroyed by fire. Now what happened? You have not taken the benefit of that particular money what you paid, but benefit is already expired, cost is already expired, car is already gone, lost. So that is called as which one? Lost cost. That is loss of uninsured. If you have taken the insurance on that car, then what will happen? You will receive the value of that car from insurance company. Suppose if you have not taken any insurance, then what will happen? Entire money is being lost. You have not received any benefit and money is being expired. So that is going to be called as lost cost. Next, we have understood what do you mean by income. Income is money earned during an accounting period. We have earned the money during the current year and which is not refundable back in future. We are not supposed to repay back in future. It's called as an income. Tuition fees collected, sale of goods. I sold the goods to the customer. I received the money. What are the money I have received? That's my income. I have earned that money. I am not supposed to pay back that money to the customer in future. That is called as an income. Next, liability. Liability means what? Money received, goods or asset received during an accounting period, and which is refundable back in future to an outsider, where there is an obligation to do repayment in future to an outsider. For example, we took loan from bank, or we took loan from the friends. We have to make the payment in future, or we purchase some goods on credit from the supplier. For that, we have to make the payment in future. But liability is payable to an outsider. Same concept is capital. Money, asset, or goods issued, and which is payable in future. There is an obligation to do the payment in future, but to the owner, is called as capital.